I've got a lot to cover. I wanted to talk about the levels, the sell-off levels. I talked about the route levels. The other day in the video, I did a Fibonacci video where I was talking about how low the NASDAQ could fall. But, Zach, give me breaking news. Yeah, we got breaking news. So we're all family here.
Yes.
Yeah, we're all friends. Stock nerds and market lovers. And let me lead by example here because, look, I'm not afraid to admit that I am a male with insecurities. I woke up today, got dressed, and I felt husky.
All right.
Yeah, I felt husky.
All right.
Tubby. Jolly old elf.
That's right.
It's the season, right?
'Tis the season.
Or it's the queso.
Right.
It's one of the two. Probably the queso.
Probably the queso.
But boys, queso's so good, right? It's really good. And so
it's Christmassy. It's got those
Right.
little red and green colors in it.
There you go. Yes, that is Danny's contribution to the opening monologue. Kudos to you, Daniel.
Yes.
And so I did what every self-respecting husky male does when they wake up feeling husky.
Buy a bigger pair of pants.
No, you go down in size because you still fit into them.
That's right.
You get your older jeans out that are really broken. Remember, it's breaking in jean season. I covered that back in October, I think,
did
or
say
maybe
that,
it was
yeah.
November. I don't remember. But anyway, I did what every self-respecting male does when they're feeling insecure about their weight, or how it's not their weight; it's how you look with your weight. I went to Bed Bath & Beyond.
Oh.
That's right. I got my coffee this morning. I got the Starbucks up on Preston, right? Well, I park and I'm like, wow, there is a lot of clamor down the road here. Yeah. Like a couple stores down is the Bed Bath & Beyond. And there's a clamor, right? And I'm like, well, I want to go see what this is about. And so it is apparently the 2 days a year, Bed Bath & Beyond has this amazing candle sale.
I was just about to say when you brought it up, what'd you do? Go buy some candles?
Bought some candles.
Because you love
I
candles.
love me some candles. I am the Venus flytrap for WKRP fans. I am the Venus flytrap of this office where I like to set the mood. I don't want to stress out about a lot of stuff, so I light a candle. I'm pretty sure it's against office policy. Not Danny's office, like building policy, but whatever. I always make sure I blow it out, except that one time I did leave it on overnight. We came back in like, it smells great in here. Yeah, it's because you left your candle on. Oh
no.
Who knew?
Wow.
But I get the long burn one, so it's okay. So,
That's right.
so I go in there.
You should have been born a woman, Tim.
Wow.
I you know what?
He doesn't know what to do with that.
Nope. Tanya says I'm the female of our relationship, so I'm okay with it.
Nothing wrong with being in touch with the feminine side. Yeah. All right.
I refer to Tanya as the human embodiment of an Excel spreadsheet, and she says you have the feelings for both of us. So
That's sweet.
That is the highest compliment you can give a woman.
so I am.
Spreadsheet compliment.
Well, I think we probably are canceled in a couple different.
Yeah.
Yeah. We just Zach, can you
3 minutes in.
Yes,
Amazing.
seriously.
All right.
Seriously. So I go to the door, right? And there's a person there. They had a bouncer at the door.
Really?
They had
Really?
granted, it was an employee.
The candle bouncer.
They had a candle bouncer. I literally called her the candle. I'm like, what do you like, the candle bouncer? And she goes, yeah. I said, you need a bouncer for this? She goes, have you seen inside the store? I'm like, I haven't gone in yet. She goes, we've had to ask people to leave. Like, it got too crowded in there. And so she is now the bouncer at the Bath and Body Works. And so I go in. They have the candle bouncer. Then they have another employee. Apparently, Bed Bath & Beyond can hire because everybody else is short-staffed at this place. It's all hands on deck for Candle Day. And so they brought in someone else to just hand you a carton.
Wow.
Like, they hand you this carton so you can, like an egg crate carton,
Yeah.
but bigger to handle all these candles. And I'm like, well, I guess I should fill it.
It's like getting a basket. Yeah.
So I'm like every other human in that store, just sniffing every candle, going, "Oh my God, this smells amazing!" In you go.
Yeah.
So we ended up. So I spent.
You left with 30 candles, didn't you?
Not gonna lie. And so
I swear he did. He just spent his last paycheck.
So listen,
believe it, yeah.
I know folks don't like to admit their insecurities on the air. So I'm going to tell you, if you're feeling husky out there, let us all go to Bed Bath and Body Works, get some 3-wick candles for $10.95, and have ourselves a weekend, fellas.
Yeah.
Now that I've talked about my insecurities, let's address Daniel. So Daniel, and now I feel bad now. But
you should. That was a big build-up for this.
Not really.
But here's the thing.
Okay.
Daniel announces yesterday, and this is what Danny does. Okay, so look, folks, I'm going to get to the sell-off in all the levels. Okay, just give me a second. So what Daniel does is, without hesitation, like we're all waiting for the show to start, and Danny's got 16 more things to do before we can start recording, and he'll take a phone call. Like it's his choice to take the call or not take the call, right?
It's impressive how often Danny picks up the phone.
Right?
I genuinely admire it.
If
I
it's
don't.
a client, I'm going to take the call.
It's true, yeah.
I swear to God, he has someone call him at 10. I think it's a power move. We tape
Somebody- it's a
the
listener
show
of the
at
show,
10:30. He's like, he tells Meryl, call me at 10:30 so I look important.
That's right.
And so I think that's what's happening. And so Danny trumped it all yesterday.
Okay.
We're on the morning call. Hey, fellas, I'm going to get on my horse and ride and get a haircut at 9:50. I'll be back by 10:20.
Yep.
And I say there is no chance in God's green earth that Danny's back before the show starts.
That's a tight window, yeah.
Tight window.
Yeah.
And I'm like, there's just no way. And then I realized,
Oh, it's Bobby. Bobby does a great job.
then I realized there's a way. The guy used the Flowbee on Danny's head. Danny, it looks like you.
He always puts the gel in after he cuts
Did you
it.
drive home with your head out the window?
Yeah, convertible. It always looks like this right after he cuts it because he loves putting that
Take
gel
your
in
headset
there.
off. Give everybody the look.
I love that Danny can't.
Then
No, give me profile.
There you go. There you go.
You look like Sonic.
It looks good. No, it's not
It's
bad.
right
Come
here.
on.
It's this side
It's
right
a
here.
good fit.
And but tomorrow it'll look awesome.
I have never
because it won't have the gel in it.
I have never seen your hair stand up. You look like one of the trolls on the troll show that my kids
Oh
watch.
my gosh, y'all are you're brutal.
Look,
It's not the roasted Danny.
Stop the bullying.
It's
Yeah, my
insecurity day.
I'm not
started
insecure
it.
about this.
gosh. That's true.
I'm comfortable with my manly hair.
It's good.
If we can't even play what Don said at the beginning of the show, like that's like the words get him on the naughty list.
I'm so
Don's
bummed.
reaction was classic.
I know. I
I
wish I
know.
was recording.
No, it's
No, leave him wondering.
Well, yeah.
yeah, no, we can. I
wanna
love
see
it.
They
that
can call me and
hairstyle
I'll tell you
on
what he
Hunter's
said.
Head. I think that would be a good comment.
Can you boost Don's levels for
Yeah,
me,
yeah,
please?
yeah.
Current hairstyle and put it on Hunter's head. That may be the
Oh,
that
would be
might be
classic.
Don's producing. I love it. Don, produce the.
I think we should put it on Alex's head.
No, with Alex's
That-
guns.
Either
Yeah,
or,
yes.
all of us.
Guns Katutis.
That's got to be.
Alex's arms,
That'd be
Hunter's head, and Dan's hair. Let's do it. Can you do that, Zach? Is that-
Frankenstein.
is
I
that-
don't. That might be too much for me.
Is that something you can do?
Some Photoshop magic.
And
I may
listen,
not
I've
be
been
able to-
I've been doing some FaceTime calls, and I have noticed I've got
A waddle?
I've got a gobbler under here.
They call that a waddle.
A waddle? Waddle?
They
Yeah.
do. I didn't know that either.
A waddle?
welcome to the club.
Yeah, I feel like I want to get this. Like, I'm okay with. Do they do a chin tuck?
They do.
I'm sure they
Oh
do.
yeah.
Oh,
They
I
do.
can actually
Nicolette.
do that.
I would do that.
Freeze sculpting or whatever.
Free sculpting? Is this what this is
Go to the
called?
gym, man. Come out to Arizona.
Yeah,
Right.
Alex got
Alex
the
knows.
Alex
Yeah.
got the guns. Katuna's got the
$12.99 a
solution,
month,
Tim.
Planet Fitness.
Stop eating and burning candles and go to the gym.
Yeah,
Stop it, you soft boy.
that's right.
We're gonna drink protein shakes mixed with
there
broken
you go.
glass.
It's good for you.
Oh my gosh, Danny, I've never seen Meryl laugh so hard. I walked out and gave her a high five, and
I saw that.
She's
I saw
too
that.
nice.
I'm going to have a word with her later.
she's way too nice, and I'm like, we're all thinking it, and I gave her a high five,
I think it's a fresh cut. I think you look good.
like
Who,
Fresh
who
Prince of Bel
laughs
Air.
louder, me or Meryl? Because
You
I
did.
haven't
You
laughed
did.
at
You
that
were.
in
There
a
was more
long
profanity.
It's
Meryl
true.
never
Meryl
curses.
would never.
Yeah.
She never.
Meryl would never.
I
do
only used one word, and it was as an adjective, so that's okay.
that. It could be also used as a verb.
It's a flexible.
Right.
It's a very-
It was not a
Tim
verb.
knows it's a very.
It's a very flexible word. Oh my gosh. Okay, one last. We'll get everybody into the 10 here. Listen, the market's not going anywhere except lower, so I will get to that in a second. So, I like it when I can make Alex laugh.
Yeah, yeah.
Like I can. If you don't know stock nerds, if you could see my setup, I don't see the fellas, so I literally have theater of the mind going. I've got Alex looking like Popeye, just sitting here doing this. Now I'm imagining Hunter's face with your head on it, and then talking about my my gobbler, and I've literally just lost what I was going to say. Tell me what I was about to say.
I have
My
no
bad.
idea. You want me to jump in Tim's mind? I have no idea.
No,
what you're
where
about
was
to
I going
say.
with that thought? Oh, one last
The market's
thing.
going lower.
Oh, the market's going lower. What did I say before that?
One last thing, and then
Yeah,
we'll go to our
give-
topics. I don't know. I don't know. You lost it.
Did I leave?
That's all right. It was
Merrill?
it was okay. It's probably a left turn for 20 minutes, so it's good.
No, it wasn't going to be
Interest
20
rates,
minutes.
interest rates.
It was going to be great.
It was something about I don't know.
No, I totally forget. Anyway, let's do levels, guys. It'll come back to me.
It'll come back.
Zach,
you
you're
go.
the one person that'll tell me what I was saying.
There's some listener out there that knows is frustrated with all of us right now, I'm sure.
I will get emails.
Yes.
There will
Tim,
be.
how could you have forgotten?
Get to the stocks. No
Oh,
one cares.
right,
no
right,
one
right.
no one cares about all this. And I'm going to tell you that person probably has the most insecurities of all of us.
That's right.
like bad hair, double chin, feels husky.
You know, it's worth mentioning, if you're a listener out there and feel that way, if you go on YouTube, there's timestamps. You can just jump right to the goods if you want.
Oh my gosh, I forgot to tell. I also did want to mention that.
How do people get to the YouTube?
Oh yeah. Oh, that's right. I imagine Alex looks like Popeye sitting out. Anyway, that's where I was going.
That's where you're going. You were going to go through
Theater
the
of mind. Yeah, I'm good.
Yeah.
So look, here is what's happening with the market. So talked about this on Wednesday night. So to do this, thinkorswimmers out there, you just get your drawing tool. Okay, we're going to go right here. We're going to choose Fibonacci retracements. Okay, so we're going to get our fib tool out here, and we're going to take a recent high, and we're going to go to a recent low. And what that's going to do is give us levels. Okay. And so those levels are fib retracements. I don't look at, there's preset levels. The levels you see on my screen here are like the main ones I look at, okay? You got to go in there and customize it. I want a 1272, I want a 1618 on the top side, I want a 786, 618 and 50% retracement. Those are the levels I'm concerned with. And so and the 50% is really crucial for me because I know when markets break down, the market is going to take back half on any time frame. And you're like, how can you be so declarative, fat man? Well, here's how I can do it. Because of
Fat man.
that's
It's not Batman. It's Fat Man.
Yeah, I don't wear a mask. I wear a cheesesteak. That's the note. Danny takes
Ooh,
notes throughout the
cheesesteaks.
right.
Yeah, hey,
yeah.
that
Like
was
in my utility belt, I've got a cheesesteak. I've got
You got
some
mustard and Ted.
I've got some queso and chips. What does Fat Man wear? Right? Is it a cape or is it?
I think he dresses like Boy Wonder, Robin, but just heavy.
Fat Robin?
Yikes.
That's what we need to put on
Fat
the, on
Robin?
The thing.
That's what
Tim
needs
in
to
a
go on
Robin
there?
suit.
Fat Robin?
Fat Robin.
Wow, man. Dude, you're not getting nothing at Christmas.
Cole.
Cole.
And Spice Rub.
It's spice. Oh my gosh. Do you 1 second from these levels?
Oh, no.
It is high spice rub season here. That's what I was going to.
is.
That's what I was going to start the
Absolutely it
show
is.
with
Yeah,
before Danny showed
saw
up.
my hair?
Yeah, seriously. Meryl looked at the Christmas letter. So Danny sends out a Christmas letter. She looked at me yesterday and she goes, "We need to have an intervention with Danny." And I said, "What?" And she goes, "Look at this." And I said, because Meryl and I talked.
Yeah.
And she goes, I got him to sign it because I told Danny on the phone, you need to sign the Christmas letter. She goes, I'm too busy for that. I'm riding my horse to get a haircut. And I said, you got to sign the letters, man. It's a personal touch that you need to sign the Christmas letters. Danny doesn't like his signature. It's not consistent.
You'll sign them all by hand?
Yeah.
I can just
I
get those
did. I
photocopied?
did.
Look at you. Hey.
Dude,
And they're all
that's-
different.
They're all there. Yes, that's how it's authenticity, man.
I'm
the only way to
impressed.
achieve authenticity is to be what, real and authentic.
Yes.
And so, Meryl goes, "Look at how big this is," and she's just like, "It's like a Cezanne or it's just all over the place, man." And so Meryl is on a mission now. That Christmas letter is going to be 3 sentences next year.
Yeah.
I guarantee it. She is the best thing to happen to this office. Danny added
She's a saint.
pictures to it and stuff, and he called me. He said, "What do you think?" And I'm like, knowing I'm not going to talk Danny out of using one of these, I'm like, just go for it all, man. Because I think
I did.
Just go for it all. Because Danny calls me back. He goes, "Yeah, Meryl said what you said. It's too much." And I'm like, okay.
I'm going to have to get a copy of this. I can show it on the show
it's
I'll
great.
show
next
it to
week.
you.
Yeah.
Her disdain yesterday was fantastic.
That's great.
And I just looked at her, smiled, gave her a high five, and walked back to
I'm
the
excited
office.
to see it.
Yeah.
Yeah.
So anyway, these levels. Zach, I'm gonna get my. Can you get it, Danny? Oh, yeah, thanks. So, by the way, if you want Spice Rub, just email dan@reviewerasset.com. Let me pull that up if I can. Dan at reviewerasset.com. And I'll tell you what, whether you're a client or not, if you're a client, you're getting Spice Rub. in your stocking for Christmas. Okay.
right.
And it's the best thing. People love it.
good
if you're not a
stuff.
client and you're like, Tim's talked about it so much and talked it up so much. And I only talk about it. If it was awful, I wouldn't bring it up once. I swear to you. If it was something that people genuinely didn't like, it's only funny because it's good.
Right.
Like
that's the best part of it. You try
right.
it, it's actually good.
Yeah, it's only funny because it's good. It's only funny because people genuinely do email Danny for it. And it's only funny because there's now this whole, like Danny's got this San Antonio, Texas swag. And where people would send out a Christmas card, Danny upped it by one Texas notch and sends out a spice rub. That's the only reason why it's funny. It's perfect. Yeah, it's because it's good. And so if you want some, just email him, dan@riverasset.com. He shares it with the world, and people seem to love it. Like a Hickory Farm summer sausage. It's a Christmas tradition.
Summer sausage.
You don't like that?
I do not like summer sausage. I like dried smoked sausage, not
Which,
summer
by the way,
sausage.
begs the question, what's fall sausage? What's spring sausage? Why is it summer sausage? If someone can get on that
Those
for
have
me,
to exist.
that would be fantastic. So here we go with the levels. So you got your Fibonacci retracement tool. And so recent low to recent high. You're going to, what I look for first, on a pullback, I'm not so much concerned with this 786. On a pullback, what I'm looking for is, did something get up to a 172? Because that's where most moves will terminate in two places, a 1272 or the third ATR. Okay? So I've given you two tools there. Like I've given you these ATR charts, like the third ATR. See how the move is terminated at the three ATR? Or a 172. We didn't get to the 172 on the SPY here. We got to the third ATR. Look for a pullback. What levels are you looking for? Well, the first thing that has to happen, by the way, I've now left everybody under the tent, and I'm giving you very valuable information here, okay? So what starts the break? You need a close, okay? You need a close below the high of the day, and you kind of got that, or a recent high. So you got it here, but it didn't. It bounced right off the 21. You got a high, and then it pulled back immediately. That is a major reversal, okay? So that gets your attention. Then the next day, even though it was up, you closed below the recent high. That starts the break or the reversion to the mean. Now I'm looking 618. If 618 doesn't hold, I know we're going to 50%. It's just the way it works. And
high probability. Yeah.
High probability. Nothing's an absolute, but it's a high probability. You can go back, and Danny, I did this for that really sophisticated trading group out here that one day, that one night. You can go back all the way to 2000 to 1990, pull your charts as SPY, go from every major low to every major high on a daily chart or a weekly chart, and you'll see the market takes back at least 50%, if not more in certain situations, okay? So 50
of the recent move.
Of the recent move. That's why you don't buy extended. Like if you know through study that the market's going to give back, or like Paul McCartney said, get back 50%. That was the Beatles. It's a lot of it. There's three others in there. And so what you want to do is you want to make sure that you don't get this. See, knowing stuff like this prevents FOMO baggins from showing up. And so when you get the fear of missing out, coupled with everyone's talking about Tesla, and it works for stocks too. Everyone's talking about XYZ stock. Everyone's talking about, got to be in the market, got to be in crypto. If you know in your heart that the market's going to take back 50% of that move, and you have a visual representation of what extended is, and extended could be third ATR, extended could be the 1272. It starts to, I'm not saying you don't get the feelings, but you can suppress them a lot easier. It's like a cigarette craving, right? Like the further away you get from the epicenter of you smoking, the cravings decrease. The more knowledge you have in the give back situation, that I've studied this for years, that's why I could present it so well in that class that night, that it dissipates. You don't have to be the one buying the top. Somebody rang the bell at 47.40. And here we are at 45.09. And so coming back to test that 50% level. Now, I suspect a couple things here. That if the NASDAQ, see, I said this in the video, if the NASDAQ breaks the 618, it too is going to go to that 50% retracement level. It broke the 618, and where is it at right now? It's at the 50% retracement level. Here's my suspicion. Those levels hold today. I could be wrong. Maybe into the close. It's just too much. And my one last thing for today's show will explain why these levels may not hold. But for the moment, they're holding. Well, Tim, why are they holding? Why are these magical lines just holding?
I was thinking of Uncle Tony.
Yeah, that's
because
exactly
you're talking about Fibonacci.
Yeah.
He hates him.
There's some people out there that are like, it's just black magic. And I'm like, no, look, it might be.
Well, whether it's a self-fulfilling prophecy and algos watch this or there's really something to it, doesn't matter.
It happens.
It happens.
That's what matters. You might not believe in it, right? Like some people believe the earth is flat. You go sailing, you just fall off in the Venus or Mars, right?
Well,
like
you don't fall off. There's a giant ice wall. That's the deal.
oh, really?
Yeah.
Wow.
There's a giant ice wall around the sides.
Well, they freeze to death? What happens?
I don't really know.
Oh, okay.
I don't actually know.
I'm afraid
Sorry.
to go-
If you're gonna-
I'll stop.
I'm afraid to take
Yeah,
another
let's
left
not dig
turn,
into
but
that.
I don't know where
actually
you
know
heard
enough.
that.
If you're going to be our science correspondent,
not.
which you are now, you need to bring more science.
Sorry. I'll study up on flat
I've been
earthers
watching
next
too much
week.
Bill Nye the Science Guy.
That's it. Yeah.
He has been?
Just easy. Go ahead.
Oh,
Go
gotcha.
ahead.
So it's the algos. And so here's the thing about algos, and here's the thing about lines on a chart. Whether it's the 50-day moving average that saved the market, 50-day moving average didn't save the market. 50% retracement didn't save the market. Algos saved the market for this moment.
And watching at those levels, they start
so they
buying at those
they
levels.
buy at the levels. But here's the thing. That's only in
When it in an orderly market. When
Normal.
it finally breaks, they're just lines on a chart.
So you need to know, stock nerds. So now let's tie it together. This is what you're going to get from our show that you're not going to get anywhere else. See, only a super graduate from the Connecticut School of Broadcasting upstairs from the CBS can give you this. Every other show doesn't give you what I'm about to give you. I've given you Fibonacci levels, how to time in with average true range levels. I've given you how to use Fibonacci in conjunction here with moving averages. And now I'm going to tell you what makes an abnormal market. There's two things. One of them hasn't worked in a long time. One of them has worked every time. Okay? I used to talk often about the VIX inversion, right? And the VIX inversion would create an abnormal market. And but quite frankly, with all the money pumping, just like the per-call ratio, I would say that it's almost, at this moment in time, irrelevant. Might become relevant again. But the one thing that works, my friends, the one thing that you need to pay attention to, like if I was going to tell you the keys to the game, right? Like what would you be focusing in on if you're able to, from work on your phone, you can get your phone set up, we can help you with that. It's the ticks, okay? And so it's the tick, it's the ticks, but the ticker symbol is $ tick. The market becomes abnormal when the ticks signal something below 1,000. Okay, and what do I mean by that? See, normal New York Stock Exchange, and this could be represented across all the indices here. But I do the tick, which is on Thinkorswim. It's an amalgamation of a couple different exchanges. On TradeStation, if you're using TradeStation, it's the pure tick. Everything at 600 to 0 to negative 600 is just noise, just
irrelevant retail trading.
Absolutely. Plus 800, plus 1,000 is
Starting to
real
get
buying.
institutional.
And it takes, listen, to get a stock to go up takes significant inertia. To get a stock to go down requires nothing more than the buyers to sit on their hands. And I want you to think about that. It's an auction. It's a price auction. So stock's at 100, nobody raises their hand. Stock, okay, auctioneer goes 95, nobody raises their hand. They go 90, nobody raises their hand. And then you get free fall. Because who's going to buy it if it keeps going down, right? There's got to be a level. And what are those levels? Where were those levels come in? Move in a normal market, Fibonacci, moving averages, maybe average true range, distant third. An abnormal market is this, what I'm showing you here from Wednesday. Wednesday afternoon, represented an abnormal market. You got minus 1,300, minus 1,400, almost minus 1,500. Those ticks are some of the lowest ticks of 2021. My friends, that's not normal. Lines on a chart don't matter when you have that kind of sustained selling. You need, and by the way, I want to point this out to you. So we've had some recovery, right? It really hasn't come on significantly higher ticks. Look at where I'm drawing. When the market started to move higher, you have one plus 1,000 tick. Huh. So everyone showed up to dump here. Who's showing up to buy? Like it's never
Jay Powell. No, I'm teasing. Not yet.
No, let's
Not yet. But if it starts getting too low, he'll start buying.
That's good. That actually was good.
I
Yeah,
know.
no,
Thank
that was really good. So
But let me clean that up just a little bit. Put my Tim Terpreter on.
Go ahead.
Because normally ticks are very short term in nature, so they don't help longer term trends. No. But they normally, because they're really for short term traders.
Right.
However, when you're coming down to the lower levels of the moving averages, 50-day moving average, whatever, Fibonacci, or the average true range, and then coupled with big 1,000+ ticks on the sell side, that's a pretty good sign. You may be breaking the levels. You may be breaking the support, the algo support.
And so far, right down here, where we're at right now, this is you stopped at what, minus 1130. That's in relation to what happened here. They're not pounding the table yet. No, what stops the free fall? Free fall is a real strong word. What stops the price from falling? A plus 800 tick. Like it doesn't. When you're imagine a boxing match. What stops somebody in their tracks? A real sharp jab to the face, right? Like, okay.
Or hopefully the bell.
Yeah, one of the two. Sometimes the market needs to be saved by the close. Like, okay, you can't
Saved by the bell.
Yep. And so a plus 800 tick will typically start the process of reversal. And if you get a plus 800 tick and it doesn't stop the reversal, look out below. So today is going to be super interesting going into the weekend. A bunch of fear mongering out there. And that's the thing. I don't want to fear monger. Like, we don't fear monger here. We fact monger.
Fact monger. I like that.
And so what's really happening? Like, I had all this intention to talk to you about the jobs report.
Yeah, forget it.
Yeah. Like, well, here's the thing. Like, I'll give you two seconds on the jobs report. Lower jobs, higher inflation. Boy, that sounds like we should probably have
lower jobs. Oh, you mean we're having lower jobs and higher inflation? Well, I'm saying lower jobs don't create inflation; they're actually the opposite.
Oh,
the
I meant
way you said
yeah.
that.
Oh,
I'm
sorry.
Made you sound like an idiot economist saying, "Oh, well, the jobs are weak, therefore we're going to have inflation."
Speaking of idiot economists, let's get to Austin Goolsbee. So Austin Goolsbee, I take the kids to daycare every day, most every day, and so I'm like, Remy, I want to tune this in for a second. And I tuned it in to the CNBC on the Sirius, and you can't, like, we refer to Austin Goolsbee as the number 2 eraser. Yeah, that he looks like the embodiment of the pink Austin Goolsbee, and so that's what he looks like either Beaker from the Muppets or this.
Austin Goolsbee. I can
Yeah,
look this guy up.
you know what? Can you get Beaker on that whole thing that we talked about at the beginning of the show?
Look, the Fat Man and Robin. Yeah, I'm sure I can work that
Oh,
out.
yeah, it hurts. So probably shouldn't do Fat Man. And
Probably shouldn't.
Probably shouldn't. So Austin Goolsbee says, well, the reason why there are low jobs is because everybody's leaving their jobs to become their own entrepreneur, to become their own boss, and they're not counted in the survey.
Which is ridiculous because small business creates jobs. So if you start on your own, you hire.
Just nuts, right? And so I'm like, oh, I'm done listening to this, Remy. We'll go back to the chipmunks.
Well, the other thing they're saying is the inflation has gotten so hot because the economy's doing so well in overheating. What?
Well, let me give you
Dude,
something.
the economy's doing okay, but it's not.
I've got something for you on that if you want it. Hold on. I'll come back to ticks here in a second. I got something for you, Daniel. I thought of you. Let me just give you this here real quick. So, see, Stock Nerds, you get through the first 5 minutes, and then this becomes the best show you've ever listened to. And so let me tell you that wages, right? They're up for the year 4.8%. Inflation for the year is up 5.8%. And then, but let me just give you this on a different scale here. I'm going to just highlight right here, okay? So, well, Tim, what parts of the economy are? By the way, you can have all this in the show notes. Find the show notes on YouTube. Revere Asset. Alex, how do people get to your bonus video this week and where the show notes are going to be posted?
Yeah, just go to youtube.com and then type in Revere Asset Management, and you will find our videos. We post daily market insight videos every night. I do a bonus stock video once a week, and we also upload our podcast, which is currently running there once a week as well.
Oh, I did a video on how to set up your ATR charts for thinkorswimmers. You can have it there as well. Upward pressure, broad-based. Energy costs recording the biggest gain, 30%. Energy costs for the year, Daniel, up 30%. Gasoline up almost 50%. Inflation increased for shelter, like the Rolling Stones, give me shelter, 3.5%. Food, 5.3%, highest since January of 2009. Namely, Daniel, food at home. We're going to save money, Daniel, this year. We're going to eat at home. Food at home is up 5.4%. You want a new vehicle? Up almost 10%. Used car or truck? Up over 26%. Transportation services up 4.5%. Apparel, want to get dressed.
Okay. We got lots of inflation. We don't have to go down the whole list. Terrible inflation.
Well, maybe not for you. Look at you.
Maybe not.
What about haircuts?
Ooh.
It went up.
You paid more for that?
I knew he was coming. I was about to say maybe it shouldn't have.
So listen. That's why you're getting what you're getting today. There's also something else, I believe, that's happening under the current. So you've got slowing jobs, okay? And by the way, there's a bunch of folks out there that are teetotalers for the government number, okay? That the government number doesn't lie. This is not a conspiracy. They're out in force today telling you that the government number is not right. I'm not making this up. I heard the dude on CNBC say it, so I went looking for other people. It must be a talking point. Mm-hmm. Like they're saying the government number is too low. This number will be revised upwards. They may be right, but same people for years have been saying you always trust this government number. So now so it doesn't fit the narrative.
Right.
Yeah. It's that the economy could be. What would be the worst thing that Jay Powell could do? I don't know. How about? Let me give you a history lesson. Breaking news, Zach. Come on. What happened in 2006 to 2007 that set off the housing crisis? Well, let me give it to you. It was Ben Pencil Stub Bernanke raising interest rates 15 mother humping times into what, Daniel? A slowing economy. To throw what, Daniel? Housing into the brink. Hey, Jay Powell. Nostradamus himself. Why don't we do this? How about we recognize, could the economy be slowing right now? Could it be? Are you getting signaling? Did we have a strong job? We've had a few weak jobs reports. We have this spiking inflation. Maybe the time to tighten isn't now. You missed the time to tighten. But here's the thing, folks. Now, this is not...
Well, they've created the problem the whole time.
Exactly.
I mean, they create boom and bust cycles.
So they're about to create...
you're asking the Fed to fix it.
Now I'm going to give you non-factual news. They're about to create a bust cycle. And this is the problem.
Well, if they tighten.
They've got to, because a conspiracy theorist here, Jay Powell, now has to take the fall. So you've got a government, and look, whether this is not pro one party or another, I'm agnostic in this fact that all I want to do is make or save money. You have a party right now that has been laid blame for the inflation issue. I believe with like a good part of me thinks that Jay Powell now, by accepting the nomination to get renominated to the Fed chair, the deal is you're going to go out there and look like you're trying to fix this inflation issue. This dude was smacked with inflation data. Like, take a wet fish, call it inflation, smack Jay Powell in the face with it, and he didn't blink once in 2021. You mean to tell me in the 11th month, on the 11th hour, in front of a Fed meeting, in front of Congress, he all of a sudden went to the gas pump to figure out it cost more?
Well, it's been transitory ever since Yellen. So.
And he made a deal. This dude made a deal. You will renominate you. I mean, has there been a once and done Fed chair? I don't think so.
I'm not debating whether he's going to talk about controlling inflation and trying to act like a parent. I'm saying they may say, a lot of times the Fed's lying. They'll say they're going to tighten, but they still flood the economy with money.
I agree.
So he may talk about it. I just don't think
he's
he
the
will
fall
actually
guy.
tighten.
But he's the fall guy for it.
Oh, sure.
And that's going to keep the market in. It's going to keep the market doing what it's doing right now into the start of 2022. Don brought this up in the call the other day, and he look. I think Don's right here so far. I mean, Don could be wrong, and it's not about right or wrong. He brought it up. It's a really good point. The last time they tried to do this was 2018. They tried to bring us out of it, and what did they do?
In December, right?
Yeah. And so, be aware. Like, absolutely, positively be aware. Like, I'm giving you fact-based price information that you can look at. You can disregard everything about jobs, disregard everything about what Jay Powell's doing. You could live in a hermetically sealed vacuum, and if you just had access to charts, you would be fine. You're like, it doesn't matter, Tim. Tim, you could have shut up about 10 minutes ago. Nothing about.
Oh, hallelujah! I agree.
That's when you become religious.
Oh, I'm just busting your chops.
So you could, if you just looked at what the market's doing, and by the way, this isn't bad. This isn't, I mean, let's get some weekly charts going here. What are we doing? We're coming down to the weekly mean. No big deal. It only becomes a big deal when the ticks
But if it breaks and doesn't hold, that's when
the ticks get out of hand. And I tell you what, it's been a long time since you had, I don't remember the last time you went down and touched. It had to be 2020 in March. 2020 in March is the last time you broke the 10-week moving average.
So right now your antenna's up.
Yeah, because I really think that they're going to go through with this tightening. And
Yeah, I don't. Not a snowball's chance in hell.
Oh, I'll take that. I'll take that coffee bet with you.
Okay.
Yeah, like
But you got to do it by measuring the free reserves, the excess reserves, and the money supply.
You don't think they're going to raise rates, Dan?
They can raise rates 0.25% to make it look like they're doing something, but then if the free reserves go up, then it doesn't matter. So let me give you a little history lesson. In the late 70s, when Carter was in office, they kept talking about they were going to tighten, and they actually started raising rates. And they did it 3 or 4 times, but at the same time, they threw money out of airplanes. They started doing all these big spending programs, and inflation got worse, even with rising rates. Inflation got out of control. They finally got Volcker in there, and he rose rates so high that he killed inflation. There's no way they're raising rates 3, 4, 5%. They may do it 1/4 point. That's why I'm saying forget about what he says about interest rates. You've got to watch the excess reserves in the banking system. That's where they truly tighten.
Aren't they backing up the repo purchases?
I'm sorry?
Aren't they backing off on the reverse repo? Basically, reverse repo.
They kind of started to, and then they eased up. Every time they start to, rates actually start to rise in earnest, and so they wimp out and they start buying again. That's the whole point. That's what I'm saying.
These people are political appointees in a in a thought to be non-political office.
Right.
They don't want to be fired.
Oh, I know that. Neither do the politicians want to get voted out.
Yeah, and so the do something crowd is now in control. And whether that do something is the right thing to do doesn't matter at this moment. Jay Powell.
Okay, here's the question.
Yeah.
What do you think happens if they truly raise interest rates in earnest?
How many times are they going to do it? It took 15. So here's the thing. It took 15 rate raises in a row to send us to the worst recession since the Great Depression. Now, It's not going to take.
After flooding the market with money for
Right.
years and
Yeah.
giving free money out.
Are we in a similar housing market? Probably not. I mean,
A little overheated, but yeah.
yeah. I mean, there's a lot more scrutiny and.
Well, there's no robo, like just
Yeah.
signing off and no verifying income.
Yeah, like
I
I
can
don't want.
attest to that. It was very invasive on how much information they needed for us to buy a home. My wife
Yeah,
and I.
and-
We're pretty vanilla.
And so I don't think you want to go down that rabbit hole in conspiracy theories. And before you know it, you find yourself watching The Big Short. You don't realize that guy almost bankrupted his firm because he was early. When the trade works out, you were early. When the trade bankrupts your firm, you go to prison. And so he was just early. He was early to short Tesla. And so Michael Berry, right? And so I think you just want to watch levels here. Like don't. What you don't want to do is, and Danny will, we have some folks in the circle, friends of Revere, right? Stock nerds, market lovers. We love you all the same, but some of you have some predetermined beliefs, confirmation bias, right? And so when something bad happens, told you so, I read about it. And look, some of that stuff's going to come true.
It's called data mining. You're looking for facts that
Yeah.
confirm what you believe.
Yeah, and I think right now, you just you don't need rose-colored glasses, but you certainly don't need Alex Jones-colored glasses either. Like you need just neutral, and I think price gives you that, and I think the things that we're talking about will give you that. You can have the heads up, you can watch all the news data you want, but if you listen. In these times, in these specific moments, Danny, Don, and I have witnessed people blow up their accounts with UVXY. Okay? Shot across the bow that it's easier to be in cash than try to figure out when the market may or may not fall off a cliff. And so I caution. I think that you just want to have a real neutral mindset, a real flexibility. And if you do that, I think you'll navigate whatever is about to happen, whether the market finds its footing at this 50% retracement and wants to go back up to the 21 exponential moving average, which would be the next part to short it. Okay. I think caution is warranted, but even more so that salivating feeling that you have to be a part of the downfall by buying, loading up on puts, loading up on a whole bunch of other things. Speaking of puts, man, have you seen DocuSign? It is like we're not going to ever digitally sign something again. I mean, dear Chuck.
I use it 3 times a day already.
I know.
Did they insult the baby Yazoo on their call? I mean, it's December. I get it. You don't do that. But down 40%. What did they do? Like you would think that they insulted the Pope here.
But that's another reason you want to follow the charts and look, because you see it's breaking before that one big.
Let me give you this. So let me show you this, stock nerds. I can show you this in a couple ways, and then we're going to move on to Hunter. Third time you hit the ATR, the third ATR was July. You're like, well, Tim, I like to buy the mean and sell the 2 ATR. Fantastic. You can do that. On this ATR chart, you don't really get the full visual. And that's why I use not just one. I use an amalgamation of information to provide me a sight picture for what I'm trying to achieve. It gives me situational awareness so I know where I am in time and space. I don't like to buy stocks that are crossing the mean and moving higher when the moving averages aren't stacked. Meaning the 8 isn't on top of the 21, isn't on top of the 34, isn't on top of the 50. When I get sequential ordering, like I have over here, those are easier moves to navigate. When you get a moving average cross, like I really like a 5-8. When you get a 5-period moving over an 8-period moving average, which is a shorter momentum trigger zone.
Shorter term moving average has more momentum than midterm.
When the moving averages aren't stacked, those moves tend not to be true. Shorter.
Well, they work less often.
And so there's no reason to be trafficking in this, and that gets you out of your confirmation bias. If you just did a mortgage like Alex did, right? Like, let's say Alex wasn't wicked smart like Alex is, and Alex was docu-signing everything. Like, I just docu-signed 725 pages so I could buy this house. We should go buy some DocuSign stock. right? And like, but that is 99% of the thought process when it comes to investing in America. And it's not, sometimes you get it right, and that just makes it even better, right? So, look, you don't have to traffic in this stuff. I had a whole bunch more. I've gone long. I apologize. We had to address Daniel's hair, which is a Christmas gift to all of us. Thank you.
You're not getting a card. You're just getting a screenshot of my due.
That's right.
Yeah. So listen, stock nerds, market lovers. Look, the bottom line here is there's going to probably be into the close more questions than answers because you've got this new variant out there. I'm not even going to get to it. I'm going to put it in the show notes. I think the bigger issue out there, one of the bigger issues is the delisting of Chinese stocks. And it's not so simple. And I've got some literature on literature, like I'm handing out a pamphlet at a doctor's office. Colonoscopy, camera or my fist. I've got some literature on what choice you'd like. No, I've got some literature on what it means to delist. How do shareholders get compensated? Like what typically happens when the rumors start happening about a delisting. All here.
Which, by the way, is one reason why even take the risk in those Chinese stocks that could possibly be delisted. There's no point in doing that, and that's why they're selling off already.
And you got to understand, like, there's a lot of big investment houses that have written pro pieces on investing in China, and just like anything in life, what's the agenda, right? And so,
are they going to be the scapegoat for something else?
Right. And someone might say, well, Tim, don't you have an agenda? Yeah, I do. I talk. Danny allows me the opportunity to talk freely to you, stock nerds and market lovers, about what I think you should know. And it doesn't make it always. I'm not the end all to be all. Danny and Alex and Hunter and Don aren't the end all to be all. But we're going to tell you things here that you're not going to hear at Strip Mall Advisor. You're going to get white papered. You're going to get, you should always buy. You're going to get, well, look at this dip, and then it just went up. But if it happens, if this is your year of retirement, if this is the year that you plan to retire, and you remember what happened in 2018, what do you do?
Well, or 2008, yeah.
Yeah. And it's never anybody, it's always by the dip. And, it's never anybody's problem until it's your problem, right? And so I look at it from the point of view of the couple, the individual who's trying to figure out what should I do as I move into an income earning status to a retirement and hopefully enjoyment status. And I've got the highest inflation in 30 years. Something to think about as we move on. Hunter.
Yes, sir.
What's going on, man?
Well, I don't have a ton of individual stocks. I actually have a question for you before I get into what I would like to get into, just for the sake of the video.
Yeah.
I know you're talking about the 50% retracement line there on SPY and QQQ.
Yeah.
What do you think happens if, say, for example, it slices through those pretty aggressively today? Just for the sake of conversation, I thought that would
we're going to
be
the
in
200.
charts.
Now listen, I don't think we're going to the 200 today, so let me just back off there. You're going to no man's land, and I'll show you where that is on an ATR chart.
Well, the bottom line is it means the risk is very high, and you got to take action. You got to move to cash or hedge.
So you're already right now at -2. Or I think you're going to go down to -2 ATR. So you'll probably go down to 44.65. You're at 45.25. A flush to the -2 ATR. Absolutely. Would if you break that 50% level and look at 44.65, we'll just round it up 44.65. Where's that level on this chart? Here's 4,400. So 44.65 puts you right here, right in this zone.
Yeah.
It's a zone of support, and so it all kind of like you see. Hunter asked a question. So instead of just you just pull it. Like, do I eventually think it goes to the 200? I do. But 4,400 is a round number. I think that's too far. Then I go to the ATR charts. Where's another level at that's already predetermined? Oh, this makes sense to me. Oh, it coincides with this, and so yeah, that's probably where you bust a move to.
Well, from my standpoint, I'm looking and just on the S&P here, you're now kind of retesting 4,500 area for the third time.
Yep.
To the downside, which in my opinion, when you see repetitive test of a support level to the downside, usually that's not a good thing, and it ultimately will break if you don't bounce off of it. And it's the same way to the upside when a stock is repeatedly testing a resistance level or a previous high, something like that. It finally pushes through it. That's just something I would watch on the S&P with this 450 level. It's now kind of bounced off it 3 times, or really the last 3 days it's bounced off of it.
Give Hunter the crown this week, Zach.
Investors get worn out, is what you're saying, Hunter.
What he just said is really great.
Right.
Look at the test. 1, 2, 3, 4, 5 tests of the mean on the NASDAQ before it did what Hunter just said. Great insight, Hunter. Fantastic.
Yeah. So, which leads me to say that, given what the indices look like, the S&P, the Qs, obviously small caps, mid caps, and the Dow were a little bit ahead of those two in regards to their move to the downside. There's not a ton of great looking stocks out there that are in uptrends. And really, actually today, we're seeing some of the leaders of this most recent rally. So Tim, if you pull up NVIDIA, I believe Alex is going to talk about AMD, so I'll leave that one off, but they're relatively similar. You can see NVIDIA now going through the 8-day, slicing slightly through the mean, I believe, if you can zoom in on that a little bit there. Yeah. So you've got NVIDIA going to the 21 for the first time in really a month and a half since the follow-through day, October 14th, more or less. You've got the SOX ETF also at a crucial point. It looks very similar to NVIDIA. Tim, if you could pull that up. And really what I wanted to highlight here is you've got semiconductors and home builders as two of the last remaining strong sectors still kind of trying to hold up over their 21. And what I would say here is to just caution yourself and watch those. If those begin to break down, a lot of other sectors, stocks, indices, what have you, have already broken down. These are two of the ones that most relative strength last week or two while the market was pulling back. So I would watch to see either one, if they maintain that relative strength, or two, if they begin to falter and fall, break down a little bit as the market does too. So I wanted to bring those two up, two of the strongest last remaining, but I wanted to advise caution as maybe use those as an indicator to see how can they continue to hold up, or do they eventually break down as well. Secondly, things do look pretty bleak. Like I said, there's not many uptrends. We're seeing clear downtrends on the indices, on a lot of individual growth stocks. We've seen over the last month and a half, growth stocks get, sliced in half. Tim, pull up ASAN. You can pull up APPS. Look at this. This is from 150 to 70 in 2.5 weeks, 2 weeks there. The areas where it's illiquid, and we've got like super high valuations and high growth, it's APP. Tim, there you go.
Thank you.
We've seen those names get crushed. That's a clear downtrend there. APPS can't get back above the 5-day, 8-day, whatever you want to look at there. So last liquid names, Tesla and NVIDIA, they're starting to break down as well. That's something that I think we need to pay attention to and highlight today. But the last thing I would say is just because the market doesn't look great and, there's not really many setups out there, the indices are beginning to break down, whatever the case may be, doesn't mean you can't begin to start building a watch list and looking for leaders that are showing relative strength under the surface. And so I just wanted to, just 2 easy ways to do that is to look at all 52-week highs for however whatever universe of stocks you're looking at. Look at what's pulled back the least from their high. Also, looking at stocks that have declined the most or the least over the last 3 weeks to a month has been pulling back. So just 2 areas or 2 ways to kind of start looking for maybe what's held up better than others. And I can already tell you some of the stuff you're going to see, right? You're going to see NVIDIA, the Teslas, those types of stuff for the most part that have held up better than a lot of these other areas. And the one last thing, Tim, I know I've kind of gone on a little bit here, but Apple, I would throw in there with the with SOX and ITB. If you begin to see Apple pull back, which it did a little bit today, that back below the 21, back below 160, would be something to pay attention to as well in tandem with stocks and ITB. So that's all I got, man.
Awesome. I thought that was great. Look at recent highs. You can pull a new 52-week high list from a number of sources. Investors Business Daily has it. Wall Street Journal has it. New York Times has it. You can just Google recent 52-week highs. The way IBD does it, I like it does it by sector or subgroup, which I think is really helpful. That is more helpful than just a generic list.
Yep.
So you can see strength by
Sector, subsector, as well as stock.
100%. Alex, what you got, brother?
Yeah, I got something a little different actually today. If you pull up a daily chart, can you pull up a DOCN? And you have the volume bars, perfect. Okay, so you see on November 16th there was an up day, but there was a massive amount of volume. So that wasn't earnings or any kind of news event. I've been noticing that if you see an up day with an abnormal amount of volume, but there's no news or ER, I'm starting to get the inclination that there could be a lot of selling into that strength, especially a stock that's extended or a stock that's like really about to break down. And I say that because look what happened followed up and the churn that happened at the top there after that big volume day. I would almost say like that volume bar, if you really to break it down, would be red right before it came down. And then look what happened. That thing fell apart. It plummeted. The other stock I want to pull up, you just spoke about DocuSign. I noticed the same thing yesterday. So before earnings, DocuSign had a big pocket pivot, which is like the greatest volume it's had in the last 10 days. On a very small move, it was only up 1.5% the stock, but the volume it was the largest volume day in 2 months. That's telling me someone's selling into that bit of strength. I don't know how they're able to get out more shares than there are buyers, and the stocks stay where it is, but they're able to do it, and that was a sign. And then look what happened today. It got absolutely blasted on the earnings. InMode did this. Pull up INMD. This was a few months ago. InMode. Yeah, so if you go to the left side there, before the big red bar, keep going, right there. Okay. That's not normal when the stock's that extended that there's that big of a volume day. And I remember talking to Hunter about this. I'm like, this is odd. And then the next day, it just washed right to the 50-day. So I'm starting to see a pattern. This may be a good cue that if you have a stock that's extended or it's right before earnings and it's up, but there's a massive amount of volume for no reason, no news event or no earnings, that may be a cue that someone's selling into that strength. So just be careful, at least trim. I own DOCN in my tracking portfolio from 80 at the time, and I was selling at 130 that day because of that volume bar. It actually saved a lot of money. If you could pull up IWM, this is the last thing I want to go over index-wise. And I think this will really benefit the viewers. So if you're trying to time a bottom or something, or buy a stock that's really dipping, or an index, let's say like IWM, you're not missing out. Like even if the stock bounces and you're like, oh, I'm right. Well, look what happened yesterday. So the market was up and you're thinking it's going to bounce, and you buy it, and then it just comes racing right back down. So you really want to wait for a confirmation of an uptrend, like we always talk about. Like they say, don't buy a falling knife. I don't know where it's going to go. I'm not here to predict that, but I'm saying don't buy a dip. It's not gonna. That doesn't work. It's very like the Q level here may work because see that left side where he has that what line is that? What retracement is that?
50%, 618786.
No, lower. There's like a white line I'm seeing.
Oh, these.
Yeah, right there. What?
Yeah, that's 210.
So
211.
I mean, that could break easily. I don't know, but I would advise don't buy a plummeting index or a plummeting stock. It's just your odds of success, and history has showed it doesn't work. And O'Neill has a great quote. He said, what seems too high usually goes higher, and what seems too low usually goes a lot lower. And the average breakdown of a growth leading stock I think it's 74%. So you could pull up what's a previous, pull up any leading stock, pull up CrowdStrike. CrowdStrike is breaking down, and it's went from, okay, how far down are we on CrowdStrike from that
193.
high?
We're 300 to 190. Just
So that's about a 35% loss so far, off the top of my head. I mean, 72%, it could go lower. These things could keep going down. So try not to buy a don't dip buy. That's not a good strategy. That's all I have.
awesome, man. Awesome. Well, I appreciate that. Don, we got Don does, if you don't know, folks, 21 over 21. So Friday night, you can go, if you subscribe, it gets delivered right in your inbox. If you go to our YouTube page, the video will get posted there. If you want to subscribe, just go to revereasset.com, hit the subscribe button. You're not going to get spammed. We're not this sales-driven asset gathering firm. All of our clients come from word of mouth. They come from, they hear the podcast. We don't advertise the podcast. We don't advertise anything. Like, you just find, people discover us, they listen, someone talks to them about us. And so, but if you want the content delivered because you get it on YouTube, you're just like, oh, I just want it delivered to my inbox, subscribe. Please do. Don's 20 over 21, the Dirty 30, index levels, all go right here in this Daily Market Insight tab. All videos are, they're saved forever. We don't go back. We don't pull them. We don't edit them. Like, it's just it's the volume of content we put out is 6 days a week. And so 203 pages of videos. I mean, every market night to 2014. And so we find a podcast there. But anyway, Don, what are you looking at? Did I lose Don?
No. Hold on. I've got him.
You got him?
He's talking.
Oh,
Don, can we hear you? Check. Oh, I totally can't. All right, hold on.
I can.
Maybe we'll let him reconnect while we're.
I'll tell you what. Let Don reconnect. And what I'm going to, Danny, if you don't mind, while we wait for Don, I'm going to switch the order of things. I'm going to give you my one last thing
There you go.
now.
There you go.
And then Don will be
Perfect.
the last thing,
Perfect.
the final word.
Perfect.
Right.
Can you hear me now?
Yes.
Oh, there we go.
Sorry about that, Don.
Gosh, I wanted more
Don,
of me.
I was excited for you to be the final word.
Sorry about that, Don.
I can hear you, Don.
Yeah,
What's
you
your-
mentioned the 20. You mentioned the 21 over 21, Tim. We're down to like the 5 over 21, and that pretty much gives us a clue as to what's going on with growth stocks. That and the G5 index that we started tracking in the middle of the summer have given us plenty of warnings that the stocks that we are owning, that and all of our stops getting hit. It made it very clear what's going on in this market. It started last week. It hit in earnest this week with Jay Powell's talking on when he went to Congress, as you mentioned before. Growth stocks are no touchy right now. The only thing we've got left in our portfolios are NVIDIA, Apple, and an index long, the S&P 500 long, and we've got various levels with it breaking the 21 and the 50 that we hedge that S&P. And we learned a lot of lessons from a deep dive in the harsh growth sell-off in February, March, April of this year. We applied all those learnings and got out very quickly and saved. We're pretty much in line with the market during this sell-off. And when you're in growth stocks and typically have double the risk when you're long that the market has, when the market's in your favor, you got to be quick to get out when the market turns. And that's what happened over the last 2 weeks. And we let the market take us out and be very scarce with all new buys. We in fact really didn't buy anything as all of our stops were getting hit. So our beta over the last 2 weeks has gone from a 2, which is double the market risk, down to less than half of the market risk. And until what you're seeing now is things like Staples outperforming. XLP is the Staples ETF, and you're going to see the Dow Jones outperforming relative to the NASDAQ. The G5, if you want to bring up these, I'm just going to walk through these and you can see the devastation. And this is what gave us the heads up to, hey guys, something is not going our way in growth land. Bring up IWO, first of all. This is that's just awful. This is the growth component of the Russell 2000. And when it broke the 21, you can see a couple weeks ago, it's down in support now, but these types of stocks are selling off much harsher than the indexes are. The next one to bring up is FFTY. This is the IBD 50 index. You can see very clear how all these things are broken down, and they really started to break down
Hey, Don.
the middle of last week. Yeah.
Last week when we were on the show, we were kind of, I don't know what we were talking about, but I brought up FFTY and measured it. It was up 20% for the year. It's only up 9% for the year. Like that, what a hit. It's a week. God almighty. That's nuts.
QQQJ is the next one. This is a mid-cap NASDAQ 100.
God bless.
PDP is a momentum ETF. And finally, Kathy Wood, man, you average down in losers the way she has been. This is what happens to your ETF, ARKK. That's brutal.
Here's the thing, down almost 27% for the year. Here's when...
She's left you speechless, Tim. Not too many people do that.
I was about to say, man.
I want to be careful.
We need to invite her on the show.
I don't think she'll... look, 1 year doesn't make...
Right.
Like, it's 1 year. Yeah. Like, if you say investing for the long term,
right.
Last
year was a big year. So
I mean, and you almost... whether you're averaging down, like, your actions are your actions, right? Like Bill Parcells, you are, what your record is and all that other good stuff. But it would just be better if she operated the way she did before she became prominent with all the big gains. Like she.
Well, but a lot of those funds, you got to be fully invested at all time. But here's the point: pull up any one of those charts that you've done. Yeah. Any of those, just pull one up. Just pull one up for me.
Give me a ticker.
Here's the whole point. The whole point is sometimes there's times to be in and sometimes there's time to be out. And if you look at those charts we've all shown you, they're all breaking down. When you see them breaking those stacked moving averages or the 50-day moving it doesn't matter which technical indicator you got about a 4, 5, 6, 7% pullback before you get triggered to get stopped out, and then they go down another 10 or 15%. And that's why you got to follow those rules, because if you are going to follow a pie chart, you may be okay in the long run, but you're going to have to put up with 25, 30, 35, 40% drawdowns every 3 or 4 or 5 years, and most people will not sit through that. They'll hit their pain threshold, they'll say uncle, and they won't get back in.
Like everyone who piled into ARK.
Yep.
Everyone who
performance chasers.
But look at Square, look at PayPal. I mean, even Affirm's now only up almost 12% for the year. Like UPST, like there is massive rotation going on, and it's been masked by the indices, right? Like Don.
But now even the indices are breaking.
Right.
Everything is.
Don, like Hunter brought it up. They've all been talking individual stocks, especially their videos and stuff. But like Hunter brings up Apple. Like Apple, what is Microsoft doing today?
It's down.
Starting to break. Yeah.
You take a few big mega stocks, and if they finally give up the ghost, the indices are going.
Yeah, that's going to be the.
And the way to do that,
hammer.
I think, is QQEW. Like, just look at the equal weights, and you get if you want to even out the playing field, you look at the equal weights just to see are one or two stocks holding up the entire market, and if those stocks start to break, well then. And
we're not trying to fearmonger. Who knows? It may hold these levels and start to rally again. Yeah. But that's why you just.
Oh, Tim, I forgot my most. There was a point I written down. I didn't say it. I actually wanted to talk about this.
Please.
I did say try not to buy a 1 day rally, but the most vicious rallies occur during corrections.
Yeah, that's true.
So that's something to note. Just because the market may rip higher in 1 day. That's usually happens in corrections. The biggest updates range-wise.
10 out of 10 of the biggest percentage up days all happened in bear markets.
Thank you.
Out of 20, out of 20, the 20 biggest up days, only one happened in a bull market.
Thank you.
Yeah, look what bond price. What are bond prices doing? Don, what's TLT doing?
TLT broke out. It failed earlier in the week, and it broke out today, and we're looking at this hard as a long.
Yeah, like bond prices, and with this signal, stock nerds.
And bonds have changed from, oh, good, yields are dropping, so that's good for tech, to yields are dropping because people are piling in.
It's fear.
And
Fear,
demand
yeah.
is exceeding supply. It's a total fear
Look
trade.
at this 10-year Treasury. Just.
And what happened when yields were dropping? You could almost set your watch by it that growth stocks were rallying months ago. Not anymore. Now it's a fear trade, and people are headed into it.
Looks like the yield curve is flattening then, right?
Yeah.
And that's a signal of a recession.
Yeah, and it's
normally
this slow. We talked about it. You've pumped in. That's why this spending bill. I don't think they've passed Build Back Better, have they? I'm not.
No.
Yeah, this spending bill is a really big deal. So you've pumped in trillions of dollars already to the economy. You've got 2.2% GDP.
That's probably not adjusted correctly for inflation.
Via the last release of the forecast. And
for the dollar spent, you're not getting any juice.
oh my gosh, this is equivalent to putting, like when they say stop putting, like you're just putting good money after bad into a car. Like eventually you just got to get rid of the car. You've got a 78 Pinto that you've put $1 million into. No one's doing that.
Trillions.
Trillions.
Who's counting? We're just
Right.
adding a few electronic zeros.
Ford Edge, Ford Probe. Was that the worst name for a car? The Ford Probe? Give me a break. It's
pretty bad.
Ford Probe. This is not good. I mean, when you talk about slowing growth, slowing jobs, but yet prices keep going higher. And we've talked about it. The only thing that stops the prices going higher is when demand drops, and demand's only going to drop when, Daniel?
People stop buying. Real recession, yeah.
Yeah, and that's a
People
problem.
get scared. People get scared.
That's a huge problem, folks. Man,
All right, Don, are you done, or you
I'm
got
sorry,
a little more?
Don.
I am done. Yep. Tune in tonight for the decimated 21 over 21 list.
I'll tell you what. No one likes everybody likes a train wreck. Like they all rubberneck. So if you want to see Don's video tonight, you want to see what a train wreck looks like in the markets, YouTube, Revere Asset on our webpage, or you get it delivered right to your inbox. Danny, I'll tell you what, man. We've gone long.
Imagine that.
You told me don't go long.
Even before I warned him before the show. Now, Tim, let's keep it short.
Look, you said keep it short or don't swear. I have not sworn.
I can't get you to do both. We're working on it.
Crawl, walk, run.
Tim's a work in progress.
Crawl, walk, run.
Okay, yeah.
Jeez.
Hey, for the photo, we should do flames over Dan's head, like the Yu-Gi-Oh characters.
Oh,
the
that's good.
cartoon.
Oh yeah. Got a lot
But
going
by
on.
the way,
How many of our audience know Yu-Gi-Oh characters?
About as
It
many
doesn't
as
matter.
Dune.
It's the flames would be funny on that.
Yeah.
Either way.
You know what they do know though is Heat Miser.
I actually
I
don't
don't
know who
know what
Heat
that
Miser
Heat
is.
Miser,
Do you know?
Mr.
You don't know who the
Christmas.
Heat Miser is?
Isn't that like the
Frosty?
man.
yeah?
Who's the
Frosty
Heat
the
Miser?
Snowman.
Heat
Oh,
Miser's a character
damn.
from
No, Abominable
Year Without a-
Snowman.
Year Without a
Rudolph, isn't
Santa
it?
Claus. It's Year Without a
It's-
Santa Claus.
Wait, Heat Miser?
Yeah.
Yeah.
I know the
Mr.
Burgermeister.
Nubser, I'm Mr.
That's,
Sun,
uh,
I'm
year-
Mr.
that's Santa Claus
White
Coming to Town.
Oh,
Christmas.
Close.
man.
Hold on. Which I know the Jimmy Durante Frosty where Frosty the
Snowman?
Snowman.
Yeah,
Yeah.
right.
Is that the one? There's the Heat Miser?
Yeah, so Rankin
No,
Bass made
it is
bunch
a
of
year
those
without a
films.
Santa Claus. He's right.
Yes.
It's not. It's
Yeah.
not.
Oh, okay. I'm
Frosty.
like,
Right, Rankin Bass made
But
a bunch
still,
of those
Tim
films.
should know every
Year
single
Without a Santa Claus
Christmas
was one of them.
special because, well,
I
it's
can't
still-
believe that, Tim. That's
I'm now going to watch.
Now you're gonna have to go
There's-
watch it. All right,
there's
folks.
Freeze Miser and Heat Miser.
All right, we're going out. We're going out. We're stopping the show. Hey, by the way, I did want to bring up, because every once in a while, this is why you subscribe to our YouTube channel. You can just go to YouTube, and then you can just search for Revere Asset, just Revere Asset, and it'll come up. But Tim, yesterday for the stock nerd community that are really into it, you did a short video on how you set up those screens.
ATR
Was it the
charts.
fibs or was
Yeah,
it the
no,
average true range?
ATR charts.
Average true range charts, and he actually shows you how to do that, how he does it. So if you wanted to learn how to do that, it's really more of a tool on how to use Thinkorswim,
Yeah.
not to do that. But anyway, folks, listen, if you like what you heard, please tell a friend, tell a neighbor. Just send them to revereasset.com. They can sign up for our daily market newsletter and this podcasts go right to their inbox. We won't spam them. We won't bug them in any way. It's up to them to reach out to us if they want a free portfolio evaluation, or they've got questions or comments, or they just want to give us some topic to talk about on the show. You can email any of us at dan@revereasset.com, Don, Tim, Alex, or Hunter at revereasset.com. And you can always call us old school at 855-REAL wealth.
Wow. Oh, the kiss off?
There you go.
Yeah.
That wasn't a kiss
sign
off.
Well,
That was with love.
Those
right.
those
That was
folks
with love.
watching till the end, to the credits roll, the best. It's like a Marvel movie.
Stick around,
See,
folks,
when
yeah.
you stick around to the credits, you get the Danny kiss
Yes.
off.
Yeah. And then hopefully we're going to get Tim into the Robin outfit.
Yeah, we'll see.
We'll see. I have no control over what exactly. All right, we'll see you next week.
On your money.